Hey everyone, welcome back to Upside Down Data. So what I want to talk about today is this bear market rally, or at least what so far has been a bear market rally for Bitcoin and Ethereum, and talk about if the gas is starting to run out or if there might be more room to run. Really the question I think most people have been asking over the last couple of months. And I think there's a lot of disbelief. A lot of people thought that this would peter out a lot earlier, but yet there are also some other people who have perhaps way overly of a bullish position on this and think that we're going to go unrealistically high. So I want to look at the data, see what we can see and what we can think. So I want to talk about this with Bitcoin and with Ethereum because they are the two biggest players in the crypto space. And in some ways, I think ignoring one and only focusing on the others loses some information, because I think the movements of both are important in the crypto space right now. So let's talk about both of them. So I'm showing you here the Bitcoin chart, and really what I just wanted to look at here was the structure as kind of a way of orienting what we're seeing in this rally before I talk about some data from our models here at the channel and what they're making of some of this price action. So the red line that you're seeing here, this kind of squiggly line, this is the 200-week moving average. We've talked about this before. This is an important level. It's one that often acts as support during kind of low points of a bear market, kind of towards the bottom. We actually had fallen below it, but then we rallied back above it during this rally. And so, the first thing that we'd like to see is us be able to hold above that level to have any confidence of this rally continuing. And really, when you look at it, we've been setting in more or less a series of higher highs and higher lows. We'd also like to see that pattern play out into the future to see this continue going up. And, there's not a whole lot of structural reasons why 25K should act as resistance. There really isn't much cost basis or volume that transacted at these levels. So if we can continue this kind of uptrend pattern, I personally see kind of the 28K kind of getting up into this ballpark here as being more likely to act as, or has more going on a technical perspective to act as resistance than something like some people have pointed out the bottom of this wick is acting as some kind of strong resistance. From a technical perspective, it's a little bit hard to understand exactly why that should be, because the number of people who have their cost basis down here is so low that, on a psychological level, it's unlikely that should be acting super strong unless, 25K being a round number is acting as psychological resistance. Who knows? But really, from a technical perspective, I don't think there's any reason to say that this is necessarily looking too dire. And if we flip over to Ethereum, it's telling us sort of similar story. So Ethereum's been a lot more explosive during this rally. It's, well above its 200-week simple moving average. And it's actually done, over 100% move to the upside from the lows all the way back here in June. So just kind of looking at it from that perspective, we're seeing what we'd want to see, right? To think this is more of a bullish move potentially, that especially with Bitcoin being back above its 200-week moving average and setting in higher highs and higher lows, nothing's really too concerning yet from that perspective. But let's take a look over at some of the models we have here at the channel and see what they think. Okay, so I want to start off by talking about the short-term upside downside potential indicators. So this is a risk model we have here at the channel. Reactive to moves that play out over days to weeks, so more short-term in its focus. And I like to look at the short-term UDPI when answering these kind of more short-term focused questions, like, is this current rally likely to peter out soon? Because it's the one that's more reactive to those types of moves. The longer-term UDPIs care about moves that play out over longer durations. They're more interested in more macro risk than the short-term version. So I want to switch over to the raw levels of this, just talk about this a bit more in depth. So the y-axis here is the UDPI level across time, and then the yellow here is the Bitcoin price action across time, so just overlaid on top. And so, you see that the short-term UDPI will spike up to its highest levels at market cycle, topping points, more or less. In fact, it actually got above 3 at the November high, so even catching that one better than a lot of other indicators were doing at the time. And so we can go and see where we were. We were just down below -4, which historically has been at these kind of really low risk points in Bitcoin's history where a lot of upside has then come after. But, with the short-term UDPI, it is going to be more volatile than some of the longer-term versions. It's going to be reacting to these kind of shorter-term bear, kind of rallies within a broader bear market, like here, 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 and here, for example, and getting up to different levels. And so in some ways, looking at how high it's shot up already might give us some information about how much further it's likely to run if we're still in the middle of a bear market versus in a reversal point. So you can see we've actually rallied pretty decently on the short-term UDPI for Bitcoin. We've gotten up above -1. If we look back in the past during some of these kind of bear market rallies, some have cleared up above, above 0, for example, like this one back here. Or if we go to some of these ones over here in 2018, or yeah, in 2018, shooting back up to those levels as well, though coming off at higher risk levels to begin with, we can start getting an idea of what we might expect. So if this is just a rally in the middle of a bear market and we're about to roll back over, then I think it's reasonable to think that somewhere in this general ballpark could start as acting as resistance, just like it did back here, going into the spring of this year. We saw we got a bit above 0, then fell back down. I think that could be another realistic kind of expectation that if this is just the next leg in the bear market, and we have further down to fall, that this kind of level seems very reasonable to act as resistance. And it would be confluent with what we've seen back here and with what we've seen back over here as well. Now, the one thing that's interesting you'll notice is that even though price has still been in an uptrend through here, you actually notice that the short-term risk has been rolling over. It's actually falling now. And I think there's different ways that you can interpret this. So the one way you can interpret this is being actually very bullish, right? The idea is that, if short-term risk is actually cooling off while price is moving up, that is a good sign. That means that we might be kind of accruing upside potential. We might be gaining upside potential, that more moves to higher in the shorter term are becoming more and more realistic from the model's perspective. And so in some ways, kind of finding the top there on risk and rolling over could be seen as kind of this a bullish sign that we're kind of gaining more and more realistic upside as prices have gone up. Now, the other thing that we could look at, though, is just if we look historically at how reversals in short-term risk tend to play out, you can see that sometimes they actually will play out and price will not necessarily immediately fall off. It might kind of go flat for a while, but then price does oftentimes fall off after one of these peaks. And so it's actually tends to happen both the upside and downside. When you see a reversal to the upside, that tends to mark kind of the bottom of whatever that local move was. It's actually something we saw back here as well. But then also reversals on from the top can also sometimes mean that even if price is going to hang out at that level a little bit longer, like for example here, that oftentimes more downside can come as well. And so, I think it's a little bit open to interpretation of what this means. Certainly we could see, this reversal here, then who knows, if price really shoots off to the upside, we probably see short-term risk go up and follow it again. But I'm not really seeing this as being too diagnostic one way or the other. I think that kind of my overall take here is to not worry too much about it and just say, what's the absolute level of it right now? And what's the upside versus downside potential that there is? And are we at that level that we've seen as being acting as resistance in the past? And really, since we haven't even gotten back to 0 yet, I still think it's very realistic. We have more gas in the tank for this uptrend. And that would also be confluent with the possibility on a technical side that, the 28K level seeming to have more of a target, kind of acting more as possible resistance than the level that we're at right now. Could be wrong, right? This could be the top of this rally right now. We might fall off from here. But I still think that there's some gas in the tank that could be exercised, unless something were to get in the way and really stop that from happening, like something on the macro scene getting really bearish and tanking the markets. So that's what I'm seeing with the Bitcoin short-term UDPI. Now, if we flip over to another indicator that we have, though, here, the Trend Confidence Indicator, TCI, this also tells an interesting story. So this is an indicator that is basically quantifying how confident one should be in a given trend. So 0 is kind of this dividing line between bullishness and bearishness. So being above is bullish, being below is bearish. And then the absolute level is basically kind of the confidence that the model has in the given trend. So you'll notice, going into... so I've zoomed this in from 2020 onwards. This works, across Bitcoin's history, but just so you can see what's going on more clearly, I've zoomed it in. You can check out some of our previous videos where I show the full history if you're curious about that. But for example, with the March 2020 crash, you can see, it's getting really confident, as we're kind of going down here, that this is a downtrend, which, you expect, but then, quickly shooting back to the upside as we kind of got into this V-shaped reversal to catch a lot of this upside here. And also, I've talked extensively in the past about how it really forecasted this crash going into the summer of 2021 by getting extremely just into the red, deep in the red, even as price was going up, this bearish divergence that then preceded this big move to the downside. Now, what we saw more recently in this move that we've been in here is the TCI shooting off to the upside. In fact, registering a higher level than it even did going from January of this year up through the rally that ended in March. It's even more confident that this is an uptrend. It has kind of it's thinking that this is a stronger move potentially to some degree. It's a more confident of this uptrend and its ability to continue. Now, the one thing we are seeing is it's starting to roll over a bit potentially, right? It peaked actually back over here. Now it's starting to actually taper off a little bit. So it's becoming a little bit less confident in this uptrend than it was just a little bit ago. But still, if we were looking at the raw level, quite high. And so I think if we go back and think about the short-term UDPI, and with this again, kind of the overall assessment is that, we're still in an uptrend and we should still believe we're in an uptrend. But there's a potential sign of weakness. And that's the same thing we saw in the short-term UDPI with it rolling over. That sometimes, well, just like on the short-term UDPI, that rolling over can precede, downwards movements, even if price doesn't follow immediately. Same thing can also happen with the TCI, right? When you've set in your top, and then you're coming off, usually then some downside will then end up following. We saw that, over there, you see that over here, we set in a high, even here, we all set in a high, and then you see some downside before moving back up. So we'll have to wait and see. But with these rolling over on the TCI, it's a little bit hard to know because, right here could have looked like a roll over, then we just go shooting up right here, for example. So it's a little bit hard to know if this is really it rolling over. And so that's why I still lean more on the bullish interpretation. But I do just think it's useful to note that, there's a potential sign of weakness that's showing up there, just like on the short-term UDPI. But again, I still think that the overall picture is more bullish than it is bearish. So that's Bitcoin. Let's go over and look at the same indicators for Ethereum. So this is the Ethereum short-term UDPI. And what you'll notice here is quite a different story from Bitcoin. So Ethereum has been much more explosive in the recent, past few weeks than Bitcoin has, really appreciating in price quite a bit on, the back of the merge narrative. And that shows up on the short-term UDPI, right? We can see that we've gotten up, we got up to over 2.5 really on the short-term UDPI, which is quite extended, especially given how bearish the market has been. This is quite of an extended read. And I'd actually put out a video, not too long ago, talking about why I was short-term bearish on Ethereum. And really, this is the reason why. Comparing this to Bitcoin, Bitcoin's below, Bitcoin's down, below -1 on a short-term UDPI. ETH is up above 2, or it got up to above 2. Now it's rolled over since then. It's down just a bit above 1 right now on a short-term UDPI, which again could be, interpreted in a bullish way, that this might just be giving more room for Ethereum to keep moving up to the upside, in the future. But it's also just the fact that in these very bearish conditions, getting a short-term UDPI reading above 2, above 2.5 is concerning, because that can mean that the asset's getting overextended. And really my base case with Ethereum, with this in combination with some other factors, is that I think a rally into the merge makes a lot of sense. But I personally think that a sell-off after the merge is quite realistic. It's quite a plausible scenario, because that just tends to happen when there are these catalysts that happen that are bullish. Most of the price action, most of the rallying tends to happen before the event, and then on the event, you tend to get a sell the news type of thing. You can go back and look at Cardano, for example, from September of last year. It rallied into the upgrade that enabled smart contracts, and then just was basically been down only ever since. I think it's very plausible that Ethereum is going to have at least some selling that happens after the merge happens. Doesn't mean we have to go and set new lows. I do think a sell the news event is quite likely. And the short-term UDPI is kind of backing up that thought. Obviously, it's not thinking about it in the same way. It's not kind of doing it from a narrative perspective. But I think the narrative and the UDPI level tell a similar story, that is very realistic that could happen once the merge actually hits. Doesn't mean we can't rally a bit higher before that happens, but I do still think that the main meat of this move has played out at this point. And we can look at the trend confidence indicator, which also is giving us some useful information. So, looking at this recent move, we really shot way up, actually to the highest TCI level we've had since 2020 that I'm showing you here. We really had this explosive move that the model became very confident in this uptrend, really kind of leading out of it. But you can also note that we're rolling over, we're coming back down. And again, doesn't necessarily mean that this is diagnostic or that the price has to fall off. Because again, you can see here, TCI peaks over here, and then we actually set in a higher level here before moving back to the downside. There's no guarantee right? That we just have to see a big correction here just because this is rolling over. And we certainly have plenty of room before the TCI is going to think that this is looking more like a downtrend than an uptrend, or it's that it's going to really get bearish on Ethereum. But, you know, if you want to look for signs of weaknesses, the fact that we're, you know, not setting in a new high right now, you know, might be one reason that you could look at to say that maybe, again, the main meat of the move has played out. So I still think with Ethereum, you know, I think it's not unreasonable to still be bullish. You know, the TCI is still quite bullish on it. But again, we are still overextended on the short term, but we have cooled off a bit. And so we've basically accrued more upside that could then happen. But the way that I'm kind of looking at the market overall is I think Bitcoin, I think, has more room that it could move quite realistically if broader market conditions allow that to happen. In some ways, I think kind of moving up a little bit further might be a path of less resistance for Bitcoin than just to dump down. But I don't know. That's, you know, that's obviously just speculation. But I do think that the data point to it being reasonable to be bullish on Bitcoin for at least a little while. I don't think that we've gotten too overextended on risk, and the PCI hasn't, you know, maybe is rolling over, but it's still quite bullish. I think it's reasonable. The Ethereum, that's the one where I think short-term bearishness might be a little bit more realistic, just because we're seeing the risk level being so much higher, and that's what gives me pause. That's why I think seeing such an explosive move out of it already, I think that's just going to go up and, you know, recapture some of these levels, you know, up here and just keep on going without any sell pressure of people taking profits who, you know, got in down here. I think that's probably a little bit less reasonable. Whereas Bitcoin hasn't rallied nearly as high. I think people might be willing to wait longer before really starting to take some profits. So my overall kind of read from the crypto market right now is that I think we are starting to get closer to a point where some corrections become more realistic here. I don't think necessarily that they have to happen immediately. I think Bitcoin, you know, very realistically can rally further before the correction happens. But I certainly think a correction with Ethereum is becoming more and more likely. And frankly, that could just be a correction in the crypto space more generally. And then if that does happen, the question that we have to then look at is, do we set in a higher low, or do we have to go in and set a new low? Right? That's really going to be the next big question. And I think, you know, I think it's very realistic or reasonable to say kind of overall with what we're seeing right now. I do think that it's reasonable with the main meat of these rallies that we're seeing has likely played out before a correction happens. I do think a correction is going to happen. I don't think we're just going to go ripping off to all-time highs. I think the main meats of these moves have played out. So in terms of like the short-term, risk reward, I think it's much less attractive, obviously, now than it was back when, you know, the short-term UDPI was down below -3 on Ethereum, or if we flip back to Bitcoin, was down below -4. You know, those were obviously kind of the times the model was screaming that the risk reward was really good. Now it's a little bit less clear, especially since we've been in such a bearish kind of market condition for so long. And so I do think that the main meat of these moves have played out. I do think that Bitcoin could still move up a bit further before running out of gas. But Ethereum, I'm getting very much more short-term cautious. So not financial advice. You know, take these data as you will, interpret them as you will, you know, and make your own decisions. That's just what I'm seeing from these data.